Hey, folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This video for Wednesday, August 24th, 2011 is sponsored by Realtic. Alright, guys, let's get right into the mix today. Markets are slightly higher, but really what today is a consolidation day. Consolidation, an inside day after a massive rally yesterday. The markets are going sideways, and again, that is actually slightly bullish because you have to see the markets pause. Again, the more the markets pause and consolidate, the more pressure they can possibly build for further upside. Now, you may still have another consolidation day tomorrow or possibly even Friday, although Friday's a key day because Bernanke will be speaking at Jackson Hole. It's his annual symposium speech here, and again, the bottom line is he's probably going to say something about, helping the markets or reassuring the markets. The markets are hoping for some sort of QE3 announcement. I don't think it's going to happen. Whether or not the markets sell on that is up in the air right now. A lot will be determined by what the markets do in the next 2 days. If the markets can consolidate here for the next day or so, meaning the rest of the day today and even pull back a little bit tomorrow, I'd be more optimistic they could get a bid on Friday. If they rally sharply into Friday, then my guess is you see a pullback. So it's all about how we see the charts reacting and moving into the Friday session when that speech will be going on at Jackson Hole. All right. Now, again, just take a note here on the trend line. If you connect the trend line from the lows yesterday through the low of the afternoon yesterday, it perfectly works to give you a pivot low from the today pattern right there. Notice how the market tried to get through, couldn't get through, bounced up. Now it's retesting it right with the 20 moving average as well. The trend lines have worked very, very well. It's been a great scalping day again. The market's again pegging the top here. I gave out the call on the short side right here at 117.85. 117.85, that was the short call in the intraday stock chat based on a master pivot line and a 0.618 retrace, Fibonacci retrace. And sure enough, look at the fall since then. Actually, on this play specifically, I scalped about 20 cents off of it on a little bit of a pullback as the markets came back down. But notice how you got a lot more out of it. Markets really coming down dramatically. You came right back to this level. I also gave out the call that at the 20 moving average you would go long. Sure enough, right here at the 20 moving average, a pierce of the green trend line, which was the pivot high from yesterday, you actually can go long right there. Look at the market move up. From that point on, you made a move from about 116.45 all the way to about 117 on the charts. All right, so again, just notice how the levels are giving you everything. The levels on the charts. And again, you can even see this white trend line. Believe it or not, we scalped this, although I think we did a break even on that one. As it moved up, it pulled back. We were in the money about 12 cents, put a break even stop, and then it took us out right there and actually went higher, which was a perfect candidate. And the methodology works that way, folks. It tells you when to get in, it tells you when to get out, it tells you how much profit to look for on a play, and obviously the cycle and turn days are impressive considering we knew the breakout yesterday, and this was a breakout we called for yesterday. A breakout past this line would send off into the distance a major move up, and sure enough, look at the move up going into today's morning high. All right, now in any case, the key is this afternoon. What you're going to follow is basically this white trend line. If you take out the white trend line, then you probably dump to the 50 moving average, which will be a double bottom right here. If you get through the double bottom on the 50 moving average there, you then could go to the 200 moving average. If you stay up here, you could easily rally into the close and possibly head to double top up here. All right, so those are your levels on an intraday basis. Now, there are some stocks in play today. Very interestingly, we saw financials like Bank of America and Goldman Sachs weak yesterday. They're actually the leaders today, folks. BAC, take a look at this move on BAC, up 56 cents, which is about 8% or so. That's a tremendous move on BAC. Interestingly enough, take a look at this. What is this candle called from yesterday on the daily chart of BAC? That is a bottoming tail, folks, a bottoming tail. And certainly, you can see the bottoming tail is a reversal bullish signal. Look at the action today, nicely to the upside. So again, if you read the charts, if you know the charts, you can easily maneuver in and out of this market. Take a look at Goldman Sachs today. Goldman Sachs is not doing quite as well percentage-wise, but again, nice candle yesterday, not really a bottoming tail yesterday, but still getting a little bit of a bid today. JP Morgan, which was strong yesterday, is strong again today, up 45 cents. And Wells Fargo is also having a great day, up 14 cents, although well off the highs of the day. If you go to your intraday chart, you can see it made a pivot high right here and then actually had a topping tail. Notice how these topping tails and bottoming tails work so well, folks. Whether it's on a daily chart or an intraday chart, our methodology is universal. And if you want to try to learn this methodology, try us out by taking a 7-day free trial of the Research Center, 7-day free trial of the chat room. All right, no obligation. As long as you cancel before the end of it, you're not charged whatsoever. Come in, make money as our subscribers are making. And I'll tell you one stock that I nailed today. Actually, it's an ETF. We shorted gold a couple days ago, guys. A couple days ago, we shorted gold on the GLD. I shorted it myself at 181.64. Today at 174.64 for a $7 gain. I moved out of half. It's now trading at 171, and I'm still in that other half. We nailed the top on gold. How did we nail it? Because of methodology, because of key analysis and proprietary techniques that we give to our members. Our members did the same thing. They shorted it with us, whether we're a hedge fund consulting for a hedge fund or whether we're consulting for an average investor, we're still going to give you the same exact information. All right, and that's the way we hold ourselves, folks. We're not going to give special treatment to the hedge funds out there. Whatever the information is, we give it to you no matter who you are. All right, and again, you can make this type of money. This was a great pullback, unbelievable pullback. And again, all the way from right up here, you got the gap down yesterday and the collapse, and the continued collapse on the GLD today. It's truly an amazing drop. I may decide to get out of my second half of the GLD today, but I will decide later today, obviously, based on what I'm seeing in the charts, whether or not I think the GLD will get a bounce tomorrow. And again, that's actually, believe it or not, based on the 20 moving average here. 20 moving average is going to be the key level you're watching for. If you hit the 20, you probably get a little bit of a bounce tomorrow in gold on the GLD. My guess is that is a possibility. The GLD, by the way, is off about $14 from the high just 2 days ago. From this pivot high, $14. And again, I called this, folks. I nailed it as a trade. Research Center members nailed it as a trade, and that's all you can look to do. You just want to make money, hand over fist, and go against the crowd. What I loved about the gold trade here, folks, being short gold, was that everyone else was saying buy gold. All right, when you're in the gym and you hear people saying, I want to buy gold. When you're at the supermarket and you hear people saying, I want to buy gold. When you hear analysts on TV saying, oh, man, gold's going to the moon. That's the time to start to short it. We nailed the short here, and again, making money hand over fist as it collapses down. First target here, or ultimate target, is going to be the 20 moving average. All right, very reminiscent of silver, and I pointed it out to the Research Center members last night in the nightly video, which is included in your Research Center free trial. If you go to the SLV chart, let me punch this up on the SLV, and you go back to when SLV had a run. Does this look familiar, this type of run on silver? This is almost like what we see on gold now. Look at the collapse. I mean, it can be a monumental collapse. So again, shorting up in this range, and look at the dump. Now, I don't think gold will dump that much because technically, percentage-wise, it didn't go up as much. Here, silver actually doubled. Obviously, gold did not double from the move up. So the correction will be slightly less as well, which is understandable. But either way, just notice the patterns, how the patterns repeat. Staircase up, elevator down. And then we go to the GLD chart, and the same thing applies. Stairway up, elevator down. Okay? Now, having said that, let's take a look at the dollar today. The dollar is slightly higher, which is keeping some of a cap on some of the little bit of gains we have in the markets. You can see that the markets ran, or I should say the dollar ran higher here and now is consolidating. This move up in the dollar, see how it started right around 10 o'clock, 10:10 a.m. Eastern time. These are 10-minute candles, by the way, on the UUP. And let me just go back to it and zoom in a little bit. These are all 10-minute candles, so 10, 20, 30. So this is 10 o'clock right here, and then you started to move up. Notice how on the spiders, there's the opposite movement here. See how you ran up into 10 o'clock and then reversed? As the dollar started to rally to the upside, markets go in the opposite direction. The markets will continually be an inverse play here to the dollar right now. So when the dollar starts to rally, that's what brings in the markets. And this is exactly on the timestamp sector of the market. When looking at a timestamp, meaning at 10 o'clock, 10:10 a.m. Eastern time, that's when the markets reversed because the dollar was moving in the opposite direction. All right, let's take a look at a couple other things. USO is trading flattish today. The USO has actually had a good two-day bounce, so I'm not surprised if we zoom in on the USO here. Beautiful little couple-day bounce off the lows. Let's take a look at a couple other things here. Number one, I want to take a look at Exxon Mobil. Exxon's down a little bit, although coming off the lows. The reason why Exxon's down a little bit today, folks, not only is oil kind of flat today, but also Exxon had a huge up $3.50 move yesterday. Percentage-wise for Exxon, that's huge. You're talking about billions of dollars in market cap gained in just one day in the market cap of that stock. All right, so again, to see us pull back 63 cents is just like a pause day for that, a small correction or pullback after a monumental move up. And I just want to go into one other thing here, folks. One thing to note, spiders, we nailed this. What did we say? And I've been holding to my guns here when everyone else, media was wrong, everyone else, analysts on TV, everywhere were wrong. Not only were they wrong on gold, but they were wrong on the markets. Basically, going back to this Tuesday, remember Tuesday on August 9th? This was your 700-point reversal on the daily chart of the SPY. This is the daily chart, which mirrors the S&P 500. This was your reversal day. We said the low is in. This is the low. You're not going to take out this low. And the next day you were down 500 points and everyone jumped ship and said, oh no, this is going down. We said, no. As long as you don't take out that pivot low, it is in. Sure enough, the spiders rallied 10 points. S&P rallied about 100 points. Then the markets start to collapse again, and everyone starts panicking and says, oh no, this is going to take out the lows. We're going to go lower. We're going to go lower. We stick to our guns and we say, listen, as long as this pivot low here from that Tuesday, August 9th stays intact, this is actually technically a higher low, which on a technical basis is a strong signal, and it means it should reverse back up. Everyone else, again, wrong, wrong, wrong. Sure enough, you reverse up. On this reversal, what did I do? Well, I shorted gold. I picked up a couple other stocks as well, but nonetheless, that was the way to play it. Okay? So very, very nice there. Unbelievable. Great move up in the markets. Now, again, it's going to be interesting coming into the end of this week because you have Bernanke speaking. I'd personally like to see a pause day today and tomorrow, or a small pullback, and then maybe we get a bounce on Friday. If we rally up into Friday, I'd be concerned we're going to see a little bit of selling as people may be disappointed by what Bernanke says. All right, guys. Again, come join the Research Center. You get tons of things inside the Research Center. It's a free trial, 7 days. Chat room, 7-day free trial. Come in, look at my charts live, ask questions live, and get trades live. Inside the intraday stock chat as well. And Research Center gets live swing trades as well. I mean, it's great service, so come check us out. And again, it's free, so if it's free, it's from me, right? Take care, guys.